All right. Thank you for everyone. Thank you to everyone for joining us today on another Facebook Live presentation that we hope you guys will enjoy. We got a lot of really great feedback from our presentation discussion last week on our legislative roundup. So we thought we would continue that and bring in somebody that I think everybody's going to learn a lot from. Dave Trabert is the president of the Kansas Policy Institute, a job and title that he's held for over 10 years at this point. And Dave, thank you for joining us here in West Virginia, but you're no stranger to the Mountain State. You're actually from Wheeling.
No, I am Garrett, and it's a real treat to be here helping you and all the other West Virginians there learn how to do tax relief and reduce the burden on residents.
Well, you sort of spoiled it. I was going to say, so here's a Kansas guy and a West Virginia guy. We're sitting here talking. Surely it's going to be about the 1-1 season split, right, between the Jayhawks and the Mountaineers, or Saturday's game with Kansas State. But no, we are talking tax policy. That is sort of the issue du jour here in West Virginia. And let me apologize to everybody. My voice is a little bit raspy. It's not as what's the phrase, mellifluous as it normally is. I've been battling a bit of an allergy issue all week, so I apologize up front. But Dave, I'm excited to have you here, but I'm also irritated that we have to have you here. And so by that I mean I'm excited. You have a wealth of knowledge about Kansas tax reform and sort of, kind of the mythology that has built around the Kansas tax reform plan. But frankly, I'm also a little bit irritated that we have to bring you in here because it seems like regardless of whether it's at the state level or the federal level, anytime folks want to do tax reform or talk about cutting taxes in some way, it invariably goes back to Kansas. Just give us a brief overview before we get into your presentation on what the tax reform actually was. Give us a brief overview what the tax reform plan was, and why you think this weird mythology is built up around Kansas tax reform.
Sure. Well, it was the same thing when I lived there in West Virginia, where I grew up, when I worked in other states and here in Kansas. Most often, these discussions are not about what's good policy, but they're driven by politics. People all across the nation who are opposed to letting citizens keep more of their hard-earned money have repeatedly pointed to the 2012 Kansas tax plan as their primary example of why tax cuts don't work. But much of what's been written anyway is really misinformed, or in some cases flat out true. And that's one that flat out true is like what happened recently in West Virginia when two former Kansas legislators spoke in an event sponsored by the West Virginia Budget and Policy Center. I mean, Kansas, no question, had problems, but most of it was self-inflicted and really had nothing to do with the concept of giving people a tax break. I mean, there were a lot of mistakes made, and there were also other circumstances at play that just had nothing to do with tax relief, but they still created a lot of budget issues. And then we also had a very toxic political environment. So we decided this story needed to be told because we knew we were getting all through those years, we were getting calls from all over the country like you are now, because people were saying, oh, don't do tax reform, Kansas. We knew this story needed to be told so citizens and elected officials from all around the country could learn from the mistakes here and really help their efforts to reduce taxes, create the best path forward for everyone to have prosperity. So in 2018, we wrote a book called What Was Really the Matter with the Kansas Tax Plan, so we could help people learn. And thanks to our generous donors, we were able to send a complimentary copy to every state legislator in the country. It's about 8,000 copies we sent out. So that's kind of what happened, and I can show you this presentation if you want now.
Yeah, let me, just before we get into that.
Sure.
So again, for everybody out there, what was really the matter with the Kansas tax plan? And obviously there is some emphasis on really, and we'll get into that in the presentation, why you chose to emphasize that. But actually, I think the subtitle was interesting too, The Undoing of a Good Idea.
Right.
If you wouldn't mind, what was the good idea in your estimation?
Reducing the tax burden.
Why does that matter?
Well, it matters a great deal. One of the things that I mean, it's a basic economic principle. It's no different than if your utility bill goes up or your rent goes up, you have to spend less on something else. And so the same is true with taxes. It's just the more you pay, the less you have for other economic activity, other ways to advance your life. Or in the case of businesses, it's fewer opportunities to raise wages, to expand the company. And so taxes really matter. It's not the only thing, but it's a big factor.
So when you were writing the book, just give me an estimate. How many hours of research did you put into writing this thing? I mean, how much manpower did you have to exert?
Oh, we didn't keep track of it. I spent the better part of, I don't know, 2-3 months working at it. Sometimes, taking a few afternoons in the office, working in the evenings, working on the weekends. My co-author, Dave Trabert, spent about a good bit of time on it too. We went around doing a lot of one-on-one interviews. We interviewed everybody from Governor Brownback to other legislators and policymakers who were involved. It took a while. I guess we started sometime in May, and we got it to the publisher, kind of an accepted manuscript, about the end of September.
Fantastic. All right. So you and I have had a couple conversations prior to this. You're very up to date and up to speed on kind of what the state of debate has been here in West Virginia. Mm-hmm. Governor Justice came out in November, talked about his idea or hope to eliminate the personal income tax here in West Virginia. We're still sort of waiting on the details. And I think you kind of experienced something similar in Kansas way back in 2012. And we'll get into that after your presentation. And ever since he talked about eliminating this, we've had this just sort of, and you mentioned it earlier, kind of a toxic political environment around this. And you get into this in your presentation, but just at a very high level, why is tax reform so contentious?
Oh, great question. One of the things we learned from the research we did was that there's only one thing that controls or determines how much any government taxes, and that's how much it chooses to spend on providing services. To do it right, you have to balance the budget, and you don't want to kind of what we call squashing the balloon, just pushing the pressure to some other part of the balloon. You'll want to bring down the need for taxes. But every dollar spent, whether necessary or not, has a constituency. There's a lobby for it. And legislators in both parties, I mean, we had this issue with not just Democrats, but also with a lot of moderate Republicans who, it's like they're allergic to trying to really look at the budget and figure out how to make better uses of taxpayers' money. So that's really what drove it.
Yeah, I always sympathize with legislators on this, though, because whenever you discuss about budget cuts or something like that, they really have very limited tools. And we'll get into this in your presentation again on which to evaluate programs, right? Or
yeah, because the system isn't set up for them.
I sort of call it budgeting by the tyranny of the mission statement. Because the bureaucrats, and I don't mean that in a pejorative way, but they go in there and they explain to the legislature why all the things that they're getting money for are fruitful in benefiting their fellow citizens. So I do sympathize with legislators whenever, they're being asked or kind of taught about budget cuts, and they have no idea. They have no variables on which to actually make those decisions.
They don't. In fact, they can't even, at least in Kansas, it's really difficult for them to even find out how much was spent in the last year or the year before that on an agency by agency basis. We went out and created that database. We have a website we operate called kansasopengov.org, gov.org. And it has all that kind of information, tax and spending at the state level, state payroll. So, but because they can't find it, it's not available.
All right, fantastic. Hopefully we've set this up for everybody a little bit. Dave, if you don't mind, let's jump into your presentation. We'll take audience questions at the end, and then certainly I have some questions for you as well.
Okay, let's see if I can make this work. There we go.
Yep.
Okay, so first of all, there were really three main, really avoidable mistakes that were made here in Kansas. It's just they failed a fourth grade math problem. They cut taxes and increased spending. That just doesn't work. You have to have a plan to balance the budget, and as you just mentioned, Garrett, you have to have the right systems in place. People, one of the constant refrains is that the Kansas budget was cut, whacked, decimated, hit with a meat cleaver. It's just not true. These are the numbers from the Kansas Department of Budget. You can see here in this blue box, this is the period when the tax cuts were in effect. We start right here. $5.7 billion in general fund spending in 2011. They approved the budget in 2012. At the same time, they approved a $400 million spending increase. And then you can see it wasn't whacked. There was one little dip here, but we kept setting records and set a new record in 2017 at $6.3 billion. And that's when the tax plan was overturned. There were a lot of moderate people, Republicans who got elected in 2016, came in with a mandate and combined with the Democrats to impose the largest tax increase in Kansas history. One of the things we learned was, as I said, states, it's about the spending. We looked at the spending per resident of all 50 states, and it was a remarkable difference. What you're seeing here is the 2018 per capita state spending. Now, think about it. Every state provides the same basic basket of services. There's education and transportation, social services, and so forth. But some states find ways to do that much more efficiently. So in 2018, for example, the states that tax income spent 55% more per resident than the states without an income tax, $4,477 per resident versus $2,883. Look at West Virginia here, 137% more per resident than the states without an income tax. It's not just that states that spend less can tax less, they also grow more. What you're looking at here is Bureau of Economic Analysis data looking at private sector GDP and private sector jobs. So the states with no income tax between 1998 and 2018 grew 161% compared to 122% for the states with an income tax. And West Virginia didn't do that well at just a 93% increase. You look at jobs, 49% versus 25%. And 5% for West Virginia. There is just a remarkable difference in economic performance among the states that have lower tax burdens. The states with no income tax are gaining residents, about 7 million residents over this period. And where did they come from? They came from the states with an income tax. As I said, there was no plan to balance the budget. Governor Brownback's original plan was just to reduce taxes by $350 million over 5 years. The House boosted it to $1 billion, and then the Senate took it to $3.5 billion, and there was no implementation plan. Governor Brownback's administration didn't even have a plan to implement his what became called the skinny cut. Having the right systems in place is extraordinarily important. Especially this first one, the priority-based or performance-based budget system. This is where it doesn't just happen in the legislative session. It's a year-round process. Every agency has to have its programs and services prioritized, which is the most important down to which is the least important. And you have to assign costs. What do you spend on each one of those? That does two things. If there is ever a need to reduce spending, you want to cut the thing that matters the least according to the agency. Otherwise, you're going to whack across the board, and bureaucrats have a tendency to kind of protect themselves. That's just human nature. I've seen it happen when I was in private sector too. It's not a slam on government, it's just human nature. And so it really allows you to make smart changes if you need to. The other thing is you're able to see kind of a cost per unit of measure, unit of output rather, by looking at the cost of each program, and you can compare those across agencies. You have to have a reliable revenue estimating system. Kansas doesn't. I'm not sure any state does, but we sure don't. And when you're the larger the change you're making, the bigger the difference. So that's kind of it in a nutshell.
So what was actually the plan? So I assume it was a reduction over time in the personal income tax rate, right? Was it elimination of corporate income tax? Just kind of walk us through the actual plan
Sure,
itself.
sure. Well, the political landscape was a real mess at the beginning here. There was a lot of different changes in the taxes. Governor Brownback didn't bring people in. He didn't even bring legislators in to really look at it. It was just his administration. And they knew they needed to reduce taxes. They knew that our taxes were too high, that we were losing people, a lot of domestic outmigration like West Virginia has. And they were trying to find ways that they could spur the economy and give people a break.
So is your thesis behind this then that had they actually balanced the budget, that Kansas would have experienced growth above what it actually experienced? Because I think this is one of the interesting myths around this, is that Kansas economy somehow cratered or something like that afterwards. That's actually not true. Am I right on that?
Yeah, you're absolutely right. Both on that it was the myth that the economy cratered, and on the fact that it didn't do anything. There are. In fact, I think one of the speakers at that West Virginia Budget and Policy Center meeting said something like economic growth that eluded Kansas is once again bubbling up, but that's just nonsense. Kansas is in its fifth consecutive decade of economic stagnation, trailing the nation on private sector GDP, private sector job growth. But it was different in that 4-year period when taxes were lower. For example, Kansas on private sector jobs between 1998 and 2011, we had 5.9% growth versus the national average of 11.9%. We were at about half of the national average. It improved to 64% of the national average between 2011 and 2016. And since then, since we implemented the largest tax increase in state history, we're at 23% of the national average. Between 2016 and 2019, Kansas private sector jobs only increased 1.4%, whereas the 50 state average was 6%. We saw similar things with GDP. Below the national average in that case, during the tax cut years, we were actually at 101% of private sector GDP. And since then, we're at 64% of the national average. Tax cuts were never intended. Now, Governor, there's two things here. You have to separate what Governor Brownback said from what everybody with an economic background understood would happen. Governor Brownback got really excited, and he went on one of the networks and said, this is going to provide a shot of adrenaline to the economy. And it just doesn't happen that way. It takes time. I mean, just think about it. If you're trying to attract people to come to your state, well, those businesses have leases, they have contracts, they just can't pick up shop and move. It takes time. And partly because businesses also want to see if you're serious. Within 1 year of Kansas putting those tax cuts in place, they took some of it back. And so that naturally leads people to think, well, are they serious? What's going to happen? Let's wait and see. We did get some benefit, but these things take time. And it's one of the really important things to remember. You kind of have to under promise and over deliver. Don't you have to set realistic expectations on what will happen and over what period of time.
Yeah, I think you're absolutely spot on that. I mean, in West Virginia, we're basically trying to shed 8 or 9 decades of bad policies. And we're unwinding that slowly but surely. But you cannot expect kind of this punch in the shoulder immediately after passing like something like right to work, or a phase down of the income tax, or whatever it may happen to be. To piggyback on your point a little bit on the business side of things too, businesses tend to plan on 10-year time horizons, right? Or 5 to 10 year time horizons.
Sure.
And so again, just to echo your point, these things do absolutely take time. There's no silver bullet for this, but what you're trying to do is present an overall package that is delightful, we'll say, to businesses, job creators, entrepreneurs, and families that want to move into your state for whatever reason that may happen to be. And taxation is just one piece of that.
It is. You really, I mean, it's West Virginia's and again, I understand because I'm from there, and I lived kind of the mentality when I was in Wheeling, and there's a lot of that here in Kansas too. There's always this search for the silver bullet, and there is no such thing. You really need to take an all of the above approach. You have to look at your state as other people see it, not how you see it. Because we all tend to have, I mean, I can look in the mirror and think I'm a little slimmer than I really am, and I'm a little younger than I really am. We have to look at the state through the other people's eyes, through our customers' eyes, and you have to take an honest look at how you compare. I'll give you another example. I mean, it's great. You're on the right track. You've got the right to work. Now you're working on taxes. Regulations are another thing. A friend of my wife's was looking at building a house, and they weren't sure, do I want to be there in the Ohio Valley? And they said, do I want to be in West Virginia in Wheeling, or do I want to be in Eastern Ohio? They went to a builder and got a price, and the builder says, oh, wait a minute, where's the house going to be? And they said, well, probably Wheeling. Oh, the price is $18,750 higher. It's like, what do you mean? It's the regulations. The building regulations in West Virginia forced them to add almost $19,000 in cost just to comply. That house is no more safe, no more fireproof in West Virginia than it is in Ohio. These things are, that's why it's an all of the above thing, all of the above system you have to take approach.
So let's go back to Kansas for just a second. So here in West Virginia, you know, the House is sort of doing their thing with tax reform. The Senate's kind of formulating their own plan. And the governor, who really kind of put this out there first, it has promised us that we're going to see something in writing very soon. Was it like that in Kansas? Did it sort of have all this almost ad hoc approach to it? Or was there an actual kind of plan that was presented like right up front and then kind of coalition building and that sort of thing? Or was it very much ad hoc?
It was worse than ad hoc. Governor Brownback didn't bring anybody in on it. It was just his administration. I mean, there's that myth out there that Art Laffer came in and created this plan. That's nonsense. Governor Brownback introduced his plan, and because legislators and policy people weren't in on it, we had to all start digging in and doing our own research. There really wasn't, as you're saying right now, there's nothing in writing. Well, there was barely anything in writing except a piece of legislation. And you had no idea what the impact was going to be. In their case, Governor Brownback he wanted to collapse the brackets. We had 3 income tax brackets that he collapsed to 2 and brought the marginal rates down significantly. But he paid for that. He called it his pay-fors by eliminating a lot of itemized deductions, by eliminating a lot of tax credits and exemptions. So it's not a simple thing like, okay, if my rate goes from 6% to 5%, I can easily calculate what that means. But now you've got all these moving parts. And so it was a mess. And then the House wanted to boost it. They got it up to $1 billion. But we had a different legislature. We had a pretty conservative House and a pretty moderate liberal Senate. It was really controlled back then by a coalition of Democrats and really moderate Republicans. So 2012 is an election year. Now, the Senate did not support tax relief, but they wanted to go out on the campaign trail and say, we supported it. The governor, it just didn't happen. And so they pushed it from 1 billion over 5 years to 3.5 billion. They took out all the rest of the pay-fors and really thinking no one in their right mind is going to sign that, and we'll get to eat our cake and have it too. Governor Brownback signed it. There's a whole kind of, as the world turns, I'm showing my age there. And behind the scenes, we tell a lot of the behind the scenes hall talk, bickering and arguing that went back and forth. But he signed it, and at no point did they have a plan how to balance the budget. The state budget director did, however. He showed us a plan that he had presented to the governor that would have done it. It would have reduced costs and had a balanced budget, but the governor wasn't a real big fan of cutting expenses.
Well, I mean, it's
done.
Politically speaking, it's much sexier, right, to cut taxes than it is to cut spending. Very few people are really gonna bring out the pitchforks if you're cutting out taxes per se. But if you're cutting spending or programs, again, we go back to that tyranny of the mission statement. Then suddenly you've really got a very strong coalition pushing back against what you're doing.
Right.
So let's go back to one of the things that you hear about the Kansas tax reform all the time is pass-throughs. We've heard about pass-throughs. For anybody that's studied the Kansas tax reform plan, pass-throughs will invariably come up. Dave, if you don't mind, explain what a pass-through is and how Kansas got that wrong, if they did.
Sure. Let's see, how do I want to put this? There's companies are either formed as corporations, which are called C Corps, or most of them are small businesses. They're like LLCs, partnerships, proprietorships, and so forth. They're called pass-through because that business doesn't pay a tax. It doesn't file a tax return. The profits pass through to the individual owners, and they pay the tax on their personal tax return. So the governor thought, and his team thought it would be great, since the plan all along was to eliminate the income tax eventually. So they said, well, why not start with this group? Because we are so heavily dependent on small business that they thought this is going to help. And so, in our proposal on that was ideally you should just do across the board rate reductions for all taxpayers and leave all the exemptions, all the deductions in place. But they were so enamored with their idea that I don't think they gave much thought to the really legitimate fairness issues that they got hit with. And so it was only about 29% of the total tax package, and that 71% was on the individual income tax rate reductions. But that pass-through exemption really became the poster child for most of what was wrong with the tax plan. And so there were proposals to separate it. And a lot of people we talked to in the book said they thought the plan the individual rates would have stayed in place if the pass-through was either scaled back or eliminated. And there were proposals to do that. But interestingly, here comes politics. Democrats and moderate Republicans wouldn't go for that, because if they did, people would think, okay, problem solved, public pressure to fix thing disappears. And, that's not how you get elected. That's not how you get conservatives out of office. You make them look bad. In fact, Senator Laura Kelly, who's our current governor, admitted this. We couldn't believe it, but she told a local newspaper, we'd lose all our leverage if we did that, because they wanted to really stick it to the individuals.
Sure. All right, so I've got a few more questions here, but I want to make sure that we're being responsive to our audience as well. So we have a question from the audience. Do any of these states without an income tax, of which I think there are 9, is that right, Dave?
Yes.
Do any of these states without an income tax focus on consumption taxes that would be progressive? It seems like pop, food, tobacco taxes are all regressive because lower income families disproportionately spend money on those. Let's see. I would like to see consumption taxes on things other than food, housing, transition, energy make up the difference. So I think what she's probably getting to, and I apologize if this isn't where you're going, but Governor Justice has proposed something called luxury taxes. I think he stumbled initially and said wealth taxes, but sort of an extra percentage or two, whatever it may be, on something like a luxury watch, right? Or maybe a boat or well, frankly, we don't know because we haven't seen the plan, but I think that's sort of the vein that the governor is thinking. And I think that's the spirit of the question. Just any thoughts on that question and kind of getting away from aggressive sales taxes, consumption taxes, and more towards a wealth tax, luxury tax kind of idea?
Well, let me start by saying that that's not the right way to go about it. In our opinion, putting it's squashing the balloon. You're just shifting the tax burden. In fact, I'd say that's, opposing that sales tax increase is about the only thing that the West Virginia Budget and Policy Center got right. But it's interesting, I have to point this out, that they now say sales taxes are regressive, and they are, and they hurt low income people the most. But a couple of years ago, a sales tax increase was a great idea when they proposed a new sales tax on sugary beverages. Politics always interacts with policy. There's no state that I know of among those 9 that are able to do have no income tax by charging more sales tax. In fact, one of them, New Hampshire, doesn't charge an income or a sales tax. The common theme across all those states is they spend less. They provide the same basket of services for a dramatically lower cost per resident. It's not about trying to find another revenue source. It's making better use of taxpayer money.
Let's see. We have another one here from our audience. How much should spending be reduced? Should it be directly proportional to how much the income tax is reduced? Good question there. Just any general thoughts?
Yeah, that's a great question. Going in, you really wouldn't want, in an ideal world, you'd go first and find out how much you can reduce spending. And that gives you an idea, okay, then we can do this much of a tax cut while we go look for more. The reality is, as you said earlier, Garrett, politicians, they like to hand out candy. They don't want to take back spending. And so you almost, for that reason, are forced to try to do it at the same time. But rather than looking at a specific amount, you really need to look through everything government does. Because if you go to them and say, I want to cut spending, they'll say, well, what do you want to cut? You want to cut the police, the fire, the whatever? It's always something that they know you're going to say, well, no, I don't want to cut that. Former Indiana Governor Mitch Daniels has a great way of putting this in perspective. He said, this place was not built to be efficient, but you're not going to find many places where you can just take a cleaver and hack off a big piece of fat. Just like a cow, it's marbled throughout the entire enterprise.
Oh, I love that.
And Governor Daniels practices what he preaches. He's now president of Purdue University. That's where he said this place wasn't built to be efficient. He practices what he preached, and Purdue is in its 9th straight year of no tuition increases because they find ways to make better use of taxpayer dollars and tuition dollars. So you go through by looking at the entire enterprise. And this is never, ever part of the state government budget process. Looking at things like how many millions of dollars did we spend on travel last year? How much of that was essential to delivering a service? In other words, if we didn't do this travel, would the quality of the service have been impacted? In a lot of cases, the answer is probably no. When was the last time we looked at the postage bill? In Kansas, as I said, we talked about this ahead of time. I'm a recovering accountant, and so this thing really kind of struck my eyes. In the Kansas budget, there's all kinds of fees, and then you get down to other fees. It was over $400 million in fees that didn't even fit one of the other categories, and we never look at that stuff. So you need to go through the entire enterprise and look for those opportunities and ditch the things that really don't impact the effectiveness of services.
I chuckled a little bit. We have another question here. We'll get to it in just a second. I chuckled when you brought up Indiana. It's as if people think Kansas is the only state that has ever attempted tax reform, and its attempt was an absolute disaster. That is not true in the least. Are you familiar with any other state that has done tax reform successfully?
Oh, yeah. As a matter of fact, while Kansas was having its well-publicized problems, Indiana, North Carolina, and Tennessee were at the same time were successfully cutting taxes. I mean, Tennessee is one that doesn't have a regular income tax, but they had a tax on, it was called the Hall tax. It was on some investment income. They got rid of that because they kept finding ways to do it. Tax relief can be done very effectively. In our case, it wasn't that the concept of tax relief failed, people failed. It was the implementation, and it was almost all self-inflicted injuries.
Yeah, I think you're absolutely spot on there. I know North Carolina has been very successful with what's called revenue triggers, right? So whenever revenue comes in at a certain level above an estimate, then you reduce an income tax or whatever the accompanying tax is at a similar rate. And so you're ensuring that your budget doesn't get blown out, while at the same time, the symbolic value of cutting taxes, but also the pragmatic value and utilitarian value of allowing people to keep more of their own money. And maybe let's get into that in just a second. I'm sorry, my mind's starting to go a million different places here now. Dave, can you just give us the general theory of why tax relief is a good idea? So for everybody that's out there, you've got property taxes, you've got consumption taxes, you've got certainly income taxes, whether it's corporate or personal. Why do so many people kind of zero in on income tax as the appropriate tax to cut or to go away with, and focus more on property taxes or consumption taxes? Surely there's some sort of theory behind that.
There is. The research shows that tax on productivity is the most destructive to economic growth. The property tax is the most hated tax, but the income tax is the one that has the most impact, especially corporate income taxes, has the most impact, economic impact. So that's why they look at. Now, as far as why do people in general do tax relief? Why is that a good idea? I think I'd flip that question to why is it not a good idea? Because the only thing that determines how much the government taxes is how much the government chooses to spend. So it's kind of like, if we don't do tax relief, we're tacitly endorsing inefficient spending of your money.
Absolutely. And Dr. Milton Friedman, Nobel Prize winner, said, but don't worry about what your taxes are. Worry about how much your government is spending. Now, I'm butchering that quote, yeah, but that's sort of an encapsulation of what you're saying. So we have another good question here from the audience. So if New Hampshire doesn't get their revenue from an income or sales tax, where do they get revenue from?
Well, they only have a property tax, but again, it's the spending. You saw there on the one slide, I think it was around $6,800 per resident that West Virginia spends. New Hampshire spends about $2,800 per resident. As kind of a funny story, I asked a legislator from New Hampshire that one time, it's like, how do you guys do it without an income or a sales tax? And he proudly says, well, it's Yankee frugality. He said, for example, we don't give legislators offices, we give them lockers.
I love that. That's fantastic. All right, another question here. These are good questions. Thank you, everyone. Tennessee has a high sales tax. Are there alternatives? Sorry, I've been lozenges here. My tongue is a little tied. Are there alternatives to raising the sales tax to high rates?
Well,
So they're
sure.
saying you want to reduce the income. Can we do anything else but raise the sales tax?
Yeah, you can eliminate some more spending because let me give you I've got a book here. I'll just check it. Where's Tennessee? Okay, so Tennessee is at $3,186 per resident. The average for the states that don't tax income is below 2,900. They could you keep finding ways to reduce costs. You don't want to look at shifting the burden to a different kind of tax.
All right, let's see. Another good question here. This is a little tough one. I have to admit, Dave, you ready for this one?
Sure.
All right. Income taxes make up 43% of West Virginia's revenues, or over $1 billion. The proposed cuts, and I'm not sure where they're getting the proposed cuts from, unless something is out there I haven't seen, include the Promise Scholarship. I don't know if you're familiar with the Promise Scholarship.
I am.
Here in West Virginia. Okay. Cuts to both higher ed and K-12 education and other popular programs. Let's see. Can we truly cut the amount of revenue necessary without hurting residents in needed programs?
Yes. Emphatically, yes. Because, name one, go around. I wish we're on Facebook Live. I wish you could ask everybody, get a show of hands. Who here thinks government makes absolute efficient use of your money? You would not get a hand raised, probably. Now, I don't know where they're getting that because in prepping for this conversation, we looked around. I didn't find any plan on paper. I didn't see how any tax relief was going to be paid for. So maybe somebody's speculating, but okay, in education, I'll give you an example there, a Kansas example, where you could find some money to pay for a tax without hurting education. In Kansas, they haven't spent all the money they've been given from state and local tax dollars. They started this school year with $998 million in the bank. About 15 years ago, that was around $450 million. That means over that period, they were given about $400 million in state and local taxes that they didn't spend. You look for opportunities like that. You look for opportunities to share services. Now, again, I'll use the West Virginia example. You have one school district per county. That's good. At one time, I think there were regional services that were provided through kind of county cooperatives, 4, 5, 6 counties put together.
Yep, RISAs,
that was it, right. Well, those kinds of things. You have individual school districts going out and buying everything from pencils to computers and paying top dollar. You find ways, not only for school districts, but for every agency in the state, you find ways to get things like that consolidated, use your purchasing power to bring down costs, and you also control how things happen. I remember actually when I was in Ohio in TV, we did a series of stories about the West Virginia school districts and looking at those RISAs. And they were proudly telling us how much money they had saved, both in terms of shrinkage and purchase price.
I also think too, like we have to get creative on this. I've been a big proponent of employee buyouts, right? So you take a short-term hit on like a short-term increase on expenses if you're the state, and you're removing a long-term liability from your balance sheet, essentially, right? So offer $10,000 to state employees to take a new career. WVU, our largest university, recently did an employee buyout program. I think those kinds of things, they compound over time. But we have to think.
And there's another one out there that's pretty simple. I don't know if it applies in West Virginia, but here in Kansas, the budgets are put together based on authorized positions, not how many people are actually there, but how many are authorized. And there were a lot of agencies that had more positions authorized than they were using, but they were budgeting for that. So all they had to do, this is one of the things we actually did, was reduce the number of authorized positions to the number that was actually employed. And that cut money out of the budget because state agencies build up cash reserves also, and that's part of how they do it. So you look now, you probably had some state and local government jobs go away during the pandemic. What can anyone identify an essential service that wasn't delivered last year? I know we can't in Kansas, and we have fewer government jobs here than we had a year ago. Well, before you replace them, you ought to look at, do we really need to replace them? That's not talking about layoffs. That's saying those jobs are already gone. Why would we want to bring them back? And
Right.
even the ones you do, these are great opportunities to restructure how you put staff to work to provide services.
Yeah, that's a great point. I also think too, you have to have kind of a tough conversation about just what the proper role of government is. I know here in West Virginia, they spend hundreds of millions of dollars giving to nonprofits. Do we really need to be propping up is that the role of government that we want in West Virginia, is continually propping up nonprofits, for example?
Right.
Funding for all of these kind of things that we all generally think are good. It's not that we think they're bad, but just because something is good doesn't mean it should have access or it should be propped up by public taxpayers. Would you agree with that?
Absolutely. You really need to get, and a good way of doing that is if it's if whatever it is, if it is essential, would you be willing to raise a tax to pay for it? That's how you'll find out if it's really essential.
Mm-hmm.
Everything's
Absolutely.
essential. And again, I had the same thing in private business. All the spending is essential, necessary, and it's never enough. But you have to put it in perspective and say, so would you go raise a tax to pay for it?
Okay, let me see here. We've got one more question, at least as it is right now. So, and I think we sort of covered this, but I think they're wanting a little bit more. What are the real benefits to individuals that come from reducing the income tax, especially if other taxes are raised to compensate? So to me, that's a wallet question, right? There's a couple ways to answer that, but
yeah, it depends on how it's done, and not that you shouldn't raise another tax to do it. It depends on how it's done. Let's assume, for the sake of argument, that income taxes are reduced by the same kind of percent across the board for business and individuals. So, if it's a 3% cut, everybody's getting a 3% cut. Then you have to go look at where's that new tax going, and not just look at the revenue it would bring in, but how much it might chase away. You've got a lot of people living on state borders in West Virginia who could go to Maryland or Virginia or Ohio to buy things. So if you raise a tax too much, you're not going to collect as much. Cigarettes, all kinds of things can be smuggled. So I can't say that there is a benefit, generally speaking, to reducing an income tax and raising a tax on someone else. You're really not accomplishing anything. You're just shifting the burden.
So let's see here. So I thought you sent me an interesting document, I thought, and maybe we'll just go through each one of these points. So the message you'd like to give West Virginia as it embarks on this sort of path that Kansas tried nearly 10 years ago at this point. So you gave us 5 points that, again, if you were here speaking to the state of West Virginia, you would say. One is recognize West Virginia spends more than double the amount per resident as many other states. You just want to go into that very briefly?
Sure. West Virginia, and this was in 2018, we did this for all 50 states. We took out spending from issuance of debt and took out federal spending. So we're just looking at kind of regular state spending, $6,880 some per resident versus the average of the states without an income tax below $3,000 per resident. Now, so what services are being provided in West Virginia that aren't being provided in Florida, New Hampshire, Texas, South Dakota, Tennessee, other states that don't have an income tax.
Eliminate some of the wasteful spending so to pay for the tax reductions. We don't need to get into that. We've already said quite a bit. This, I think, is somewhat sobering, and I'd like to spend a little bit of time. We've got about 10 minutes left.
Okay.
Take an honest look at West Virginia's rankings among the 50 states. It's not pretty. West Virginia ranks 49th in private job growth over the 3 years before the pandemic, growing at 1.2% against the national average of 6%. You want to say a couple words on that?
Sure. You really, the West Virginia is in some ways like Kansas. Over the years, we've done so many things wrong or not done something while other states were improving that you're far behind. And it's like in my old track days. I was in the back of the pack and there was nothing I could do that was going to rocket me from the back to the front. I had to focus on the one in front of me and the one in front of that one and the next one. It takes time, and you have to understand that the farther behind you are, the more you need to do to improve, because the rest of the states aren't sitting there saying, okay, guys, we're all going to take a couple of years off while West Virginia tries to improve. No, they're out competing too. And so that's why that all of the above approach is so important. It's going to take a lot when you're that far behind. And West Virginia has, unfortunately, another kind of a target on your back with the current administration in Washington wanting to get rid of fossil fuels. So you really have a lot of heavy lifting to do. There's education, for example. That's another thing that people look at. I mean, it doesn't really manifest itself that way. Maybe it's more like we want a strong workforce, educated workforce, and every state in the nation says, oh, we have that. And most states in the nation don't have that. Kansas doesn't have that. And neither does West Virginia. You look at the last time I looked at West Virginia, I think it was the ACT test, college readiness, 19% of the graduates who took the ACT, 19% were considered college ready in English, reading, math, and science. Something has to be done about that. And it can be done. That's the good news. There are solutions. Florida has shown how that can be done. Florida went from about the worst in the nation for low-income student achievement in reading to the best in the nation over a 20-year period. In fact, we made a documentary about that. It's called Giving Kids a Fighting Chance. You can find it on our YouTube channel at kansaspolicy.org. It's hard work, but you have to understand just what kind of an unfortunate situation you're in to understand the gravity of the hard work that needs to be done.
Yeah, I'll echo both of those and maybe drive a couple of them home. And it's not just that West Virginia is competing with Kansas or Tennessee or Kentucky or Virginia. We're competing with Ireland and Hong Kong and Hungary and places all across the world, right? This is no longer just kind of a state versus state kind of contest. And I think whenever you kind of pull that back a little bit and you examine that, you understand how difficult it is and what kind of competition that we're in right now. And then secondarily, I would say I always get frustrated sometimes when I'm sort of listening to what I term the status quoists. What is it exactly we're trying to save here in West Virginia? As you said, regardless of what you want to look at, whether it is education attainment rate, college readiness, private sector job growth, median income, rate of diabetes, disability rates, welfare rates, et cetera, we are at or near the bottom of the pack. Why would we not try to do something revolutionary, right? Pragmatically, responsibly. Mm-hmm. But we need to be having these sorts of conversations and no more tinkering around the edges.
No tinkering around the edges. Don't dust off the plan that was in place 10, 15 years ago, put a new name on it, and think things are going to get different. Kansas is doing that. We have a commerce director and a lieutenant governor who said, well, We haven't had an economic development plan since 1980s. And so they came out with a new plan that's just all the same stuff that frankly didn't produce growth. Why would you want to keep doing the same things over and over again and expecting a different result?
Yeah, we all know what the definition of that is.
Yeah.
All right, that's about all I have, Dave. Just any kind of closing thoughts, just on whether it's what Kansas experienced, what West Virginia is facing as over the next couple of months. Just anything that you'd like to tell folks.
Yeah. It's sobering, the position that West Virginia is in, but there is hope. And it really comes down to how badly that legislators and residents want to get out of the economic cellar. In other words, are you willing to make the tough decisions to achieve your goal? Because if not, then you're effectively saying that it's more important to avoid change than to create more jobs and improve everyone's well-being.
Yeah, well said. And I feel like too, West Virginia, the vast majority of its population, we've been living on the razor's edge for so long, right?
Mhm.
From paycheck to paycheck, and any kind of change, any kind of new idea can seem very threatening, right? Because you've adapted living on that edge. You know how to survive. It's precarious, it's dangerous, but you know how to survive. And I think a lot of the things that we've discussed today, a lot of the other things that Cardinal has talked about, whether it's universal education freedom, things that I'm sure you guys are doing at the Kansas Policy Institute, these are ideas to make life a little bit better for everybody. Economic growth, economic prosperity is not about putting an extra $1,000 in a rich guy's wallet. It's making it easier for your neighbor to take their dog to the vet. They have that extra money to take their dog to the vet, right? It's about allowing your neighbor up the street to save a couple $100s a month for their child's college education. That's what we're talking about here when we talk about economic growth. We're not talking about whatever kind of the progressive perversions of that narrative are. So I just wanted to kind of leave everybody with that. Dave Trabert, thank you so much for taking time to zoom back in to your former state as a Wheeling native. I'm sure you miss it on some level, don't you, being in West Virginia?
Yeah, yeah. My wife and I get back periodically to visit family and friends. We do miss it, and don't tell anyone, but I do root for West Virginia when they play Kansas. But I hate seeing things the way they are because I know they don't have to be.
Absolutely. Well said. Fantastic place to end. Dave, where can folks find your book?
What was really the matter with the Kansas tax plan is you could download it from our website. But we have some extra copies here. If anyone wanted to just drop us a note, we will send it out for free. If you'd like to make a small contribution to cover the cost of shipping and postage and stuff like that, there's no handling. We already did all that. So, but yeah, we have some books here. You could just write to our address is on the website. You could write to me at dave.trabert@kansaspolicy.org.
All right, fantastic. Dave Trabert, president of the Kansas Policy Institute in Wheeling native. Thank you for this very enlightening discussion on Kansas tax reform. Thank you, sir.
Thank you, Garrett.
All right. Bye-bye, everybody.